Hello, dear friends. Everything is collapsing. The whole world change starts with economy, and this is the best summary I have been able to make of the current situation. I have put in many hours of work. Opinion piece. Crashing August. Will the stock market fall this summer? We are on the brink of a new era. The West is heading for a crisis. It is a profound and important change. These labor pains are not in vain. The future is brighter than imaginable. Central banks are very worried. Inflation, crisis and debt top the list. The black swan reached an all-time high. Skew index shows investors' jitters. Seismic shifts in global financial system. Janet Yellen thinks a little inflation is a good thing. Euro remains as an alternative to the US dollar. Bezos record wealth at $211 billion. Ethereum could dethrone Bitcoin as a leader. Gold price near $2,000 an ounce. Gold is better investment when cryptos collapse. New Basel regulation shakes up gold market. Iceland's 4-day week a success. IMF chief calls for help for poorest countries. Stocks sink on recovery worries. Treasury bond yields sink further. Spanish village offers jobs and housing to families. European Union fines 5 automakers $1 billion. Argentine lawmaker proposes paying salaries with cryptocurrencies. Major blackout in Honduras, Nicaragua, Guatemala and El Salvador. Wells Fargo closes all lines of credit as economy is on edge. Let's start. The possibility of a stock market crash next August was hinted last night by economist Sigmund Bathory on Inmaculada Fernandez's Twitch channel, and I have found other news confirming this possibility, although nobody can assure anything, and therefore it is not a prediction, nor a self-fulfilling prophecy, but only a possibility. In the stock market, crack and crash designate a sharp, deep and rapid fall in the prices of a market. Some experts differentiate between the two concepts by using the word crash for larger crashes, in which the real economy would be affected and would require a slower recovery. Breakdown. Said and done, because this news just in. Stocks plunge as the recovery worries resurface. Stocks plunged Thursday to give back gains after a record session, with investors nervously watching the signs that the economy recovery could be derailed. The Standard & Poor's 500, Dow Jones and Nasdaq each fell more than 1% before pairing some losses. This was the first time since June that the S&P 500 opened more than 1% lower. It further sank the 10-year Treasury yield to hover around 1.29%. Concerns about the global recovery also increased after Japan proposed to reinstate its state of emergency ahead of the Tokyo Olympics. Causes of the plunge. The Dow Jones Industrial Average plunged nearly 500 points in afternoon trading Thursday, as investors showed consent that a drop in 10-year Treasury bond yields was signaling a slowdown in economic growth later this year. The Federal Reserve is moving to taper its bond buying before the end of the year. Dollar near 3-month high. The dollar was trading near its highest level in 3 months against its major peers on Thursday, after minutes from the Federal Reserve's June policy meeting confirmed that the world's largest central bank is moving toward a gradual reduction in its asset purchases this year. Seismic shifts. Wells Fargo unexpectedly closes all existing personal lines of credit, hinting that the economy is on an edge. Wells Fargo just announced that it will close all of its existing personal lines of credit, a move that will likely anger legions of customers. The revolving lines of credit, which will close in the coming weeks, allow users to borrow from $3,000 to $100,000 and were launched as a way to consolidate higher interest credit card debt, pay for home renovations, or avoid checking account overdraft fees. Customers received a 60-day notice that their accounts would be closed and remaining balances would require regular minimum payments. Seismic shifts in the global financial system. On the role of commercial banks in the global economy is changing, with lending to governments and their agencies now more important than lending to goods and services industries. The new Basel regulations appear aimed at encouraging this trend, despite the fact that retail depositors are granted a stable funding status. Central bank digital currencies are expected to increase and perhaps replace non-financial trade credit over the next 5 to 10 years. Telegram from General Michael Flynn. In quotes, "The future is much brighter than people can imagine. Nothing we are going throughout is normal, and the reason is this. We're on the brink of a new era. That's why we are experiencing so many challenges, but that has been assessed and trained. The clique had almost unchallenged authority before this generation. That is all changing, and we will not go back. Keep this in mind whenever you have difficulties. These labor pains are not in vain." Definition. Stock market crash would be a sudden and intense fall in the financial markets. In Spanish, it's preferable to call it crack with C instead of crack with CK or crash. It refers to the worst case scenario that can happen to the equity markets, because it generates a huge and disproportionate fall in the valuation of listed securities, leading investors to lose a very significant fraction of their invested capital. It is a term that comes from German and refers to an outburst. It is a well-known concept due to the economic crisis that emerged in 1929 and generated the Great Depression, which led to the impoverishment of a large part of the planet as a consequence of the intense bearish current that developed during that period of history. The most common origin of this burst is in the stock markets is due to a speculative bubble that led investors to sell in a majority way, generally without being able to sell the securities of the companies at the price they wanted due to the panic in the markets and as a consequence of the law of supply and demand. It is characterized because it is a very fast movement, and in very few stock market sessions the shares plummet to unknown levels with depreciations of 25 to 40% or even with a higher intensity. A stock market crash is this fall in the prices of most of the securities of one or more stock exchanges over a short period of time. The term crash comes from the German Crash, meaning outburst or scandal, and came into use after the stock market crashes of 1873 in Vienna, Austria. In English, the term crash, derived from crash with K, was popularized following the so-called Black Thursday in the New York Stock Exchange on October 24, 1929, and was used again on the occasion of the crash of October 1987. Stock market crashes are characterized by a panic reaction among shareholders. Massive sell orders are placed and stock purchases are halted in anticipation of successive stock market declines. This massive sell-off effect is fed back into the computer systems, which issue automatic sell orders when share prices exceed setting preset limits. Investor state of mind accentuates the speed of this phenomena, as they act impulsively, wanting to exit the market as quickly as possible. Panic produces erroneous decisions. Different events can trigger panic among investors, the most common cause being the bursting of an economic bubble. Normally, a crash anticipates an economic recession, although it can also be a temporary phenomenon motivated by excessive one-off fears, which then gradually correct themselves without having devastating effects on the real economy. Among the best-known stock market crashes are the crash of 1929, the Black Monday of 1987, the October 2008 crisis, and the health crisis of 2020. Monetary revolution. The world could be on the verge of a monetary revolution. The world economy could be on the verge of the biggest shock to its monetary system in a century. The world is heading for what would probably be the biggest shock to its current monetary system since World War I and the collapse of the classical gold standard. The economic debate in the coming years is likely to be the competition between freely created cryptocurrencies and centrally controlled central bank digital currencies. The main problem with many cryptocurrencies is that they do not meet the requirements of money. For example, the price of Bitcoin is too volatile and unstable to serve as an official currency for any nation. It is also not backed by any collateral. This is why the global banking standards issuer, the Basel Committee of Banking Supervisors, issued a statement that banks should apply 1,250% risk weighting to Bitcoin. And there is no superior knowledge of central banks or any institution for that matter to help them guide the economy effectively. The more power a group of bureaucrats or economists has over the economy, the more distorted the economy becomes, with dire consequences for stability and social cohesion. And that is why political or economic control in a society should never be entrusted to a chosen few. Black Swan. The stock market's Black Swan index hit an all-time high. At the end of June, the Skew index, also known as the Black Swan index, hit an all-time high. That reading was more than 40% higher than its average since 1990, which is how far back the data extends. In fact, the June reading was 20% higher even than the highest the index reached during the stock market's cascading plunge from February to March 2020. Skew index shows investors' jitters. Investors have triggered edges against summer market declines. Investors' growing nervousness Nervousness about the strength of the US stock market recovery have triggered a rush to buy derivatives, the insurances that protect against spikes in turbulence, raising one of the indicators of financial fear. The Skew index is a measure of potential risk in financial markets. Like the VIX index, the Skew index can be an indicator of investor sentiment and volatility. Disagreement among investors is widespread at the moment. Path to crisis. The West would be heading for a very drastic crisis, according to a veteran economist. The excess in financial markets would have to be drastically eased. Once a veteran economist, markets appears to be in cruise control mode. A crisis means a profound and consequential change in a process or situation, but it also means a reduction in the growth rate of an economy's output, or the lowest phase of activity in an economic cycle. Patrick Arthurs, economic advisor to the French bank Natixis and professor at the Paris School of Economics, does not share the joy of the New York Stock Exchange. In a very direct memo to clients, Arthurs says that a crisis would be inevitable. As economies have reopened, total outstanding debt in the US, UK, Eurozone and Japan relative to gross domestic product has come off the highs of the health crisis, but it's still at elevated levels. The money supply is also at record highs. The money supply cannot be continuously increased relative to income, as sooner or later it could no longer increase the demand for the money, which is linked to savings and income, said Arthurs. Fear of banks. What are the central banks afraid of? A survey lists the main concerns: inflation, health crisis, and debt top the list of fears. One of the top concerns of central bank reserve managers is now inflation, along with the continuation of the healthcare crisis and rising debt levels. Fears of inflation and the uncontrolled rise in long-term yields have now been rated by 57% of respondents as a top risk to the global economy. Meanwhile, 79% of respondents are concerned about the possibility of not being able to end the healthcare crisis, while 71% cite government debt levels. On the other hand, more than two-thirds of respondents expect the Federal Reserve to raise interest rates in 2023, while 30% predict the Fed will do so in 2022. In contrast, participants expect a later hiking cycle for the European Central Bank, with 33% predicting the first rate hike by 2023, 41% by 2024, and 26% after 2024. Janet Yellen thinks a little of inflation would be a good thing. Treasury Secretary Janet Yellen has admitted that we may get more inflation than originally expected with all this government stimulus. But she said that if we end up with higher inflation and higher interest rates, it would be a good thing for society and for the Fed. Risk continues. Risk has not been extinguished. It is expanding geometrically under the false stability and of a manipulated market. Risk cannot be extinguished. It can only be transferred. By distorting markets to create an illusion of low risk stability, the Fed has transferred this supernova of risk to the entire financial system. Are central banks becoming philanthropic? Recent years have seen central banks increasingly enter the debate on many other issues, including fiscal policy, social justice, race, gender, climate change, and inequality. Most profitable currencies. The most profitable and reliable currencies for making investments. Several financial experts and analysts have named the currencies with which one can invest in the short and long term to make quick money on exchange rates. These include the Turkish lira, the British pound, the Swiss franc, and others. Since the early 2000s, the Swiss franc, Australian dollar, New Zealand dollar, Chinese yuan, Canadian dollar, euro, Swedish krona, and several African currencies have been the best performers relative to the dollar, analyst Anna Zaitseva told Prime. According to her, the Swiss franc is also traditionally used as a hedge against risk, and on the long-term horizon will continue to be in demand by investors. A good advice would be to keep an eye on the currencies of resource exporting states, given the rise in oil, metals, and grain prices, she said. In turn, Ascent Capital Deputy Director Sergei Makarov suggested that the euro should be considered as an alternative to the dollar, as the dollar's position is strengthening. He also advised looking closely at the Japanese yen and the British pound to save money from inflation without excessive risk. For the risk takers who are trying to make profits during the year, they could look at the Turkish lira. The economic crisis and the weakening of the national currency continue in Turkey, and the country's leadership's stance on economic policy deviates from generally accepted economic theory, so the Turkish lira is unpredictable. Short news. Biden says ransomware attack caused minimal damage. The president said Tuesday that the ransomware attack centered on Florida information technology company Kaseya appears to have inflicted only minimal damage on U.S. businesses. Jeff Bezos hits $211 billion wealth record. Jeff Bezos is leaving the rest of the world behind when it comes to wealth accumulation. The world's richest man hit a record net worth of $211 billion on Tuesday after Amazon shares surged 4.7% after the Pentagon announced it was cancelling a cloud computing contract with rival Microsoft. The rally lifted Bezos' fortune by $8.4 billion, according to the Bloomberg Billionaires Index. Europe. German car makers fined for restricting technology competition. The European Commission fined 5 major German car makers: Daimler, BMW, Volkswagen, Audi, and Porsche €875 million for restricting competition in diesel car emissions cleaning technologies and colluding to curb the use of emissions cleaning technology they have developed. European growth. The European Union updated its economy forecasts for the next 2 years and now sees Eurozone growth of 4.8% this year versus an expectation in May of 4.3% growth. The European Union said that is the largest upward revision it has made in more than 10 years. European Union proposes to exempt private jets and cargo from tax on jet fuel. Private jets will enjoy an exemption throughout the classification of business aviation, as the use of aircraft by companies for the carriage of passengers or goods as an aid to the conduct of their businesses. Markets. Gold price nears $2,000 an ounce. Gold prices are finally reaching a longer-awaited peak as inflation fears have abated, and Goldman Sachs analyst Mikhail Sprogis said the upward move is just beginning. Gold futures post fifth straight gain. Gold futures ended higher for a fifth straight session on Wednesday ahead of the release of minutes from the Federal Open Market Committee's latest rate-setting meeting, which could provide a further catalyst for financial markets. Gold's first drop in 6 sessions. Gold futures ended slightly lower on Thursday, marking the first decline in 6 sessions, as the stocks, bond yields and the dollar headed south, perhaps controlling Valiant's slide. New Basel regulation shapes up the gold market. Gold allocated in tangible form is classified as a zero-risk asset under the new rules, but unallocated or paper gold, which banks usually deal with most, does not have this privilege, meaning banks holding paper gold will be required to keep reserves of metallic gold in their vaults. Lithium shortages loom. The number of warnings about new commodity shortages amid energy transitions just grew by 2. Macquarie Bank and Credit Suisse recently warned investment clients that lithium supplies will remain scarce for the foreseeable future, which will drive prices steadily higher. Cryptocurrencies. As cryptocurrencies collapse, Goldman buys Ether instead of Bitcoin, but gold is better as a hedge. As negative yield in debt has begun to soar again, the gold has received a bid, but cryptocurrencies have been unable to recover. And while Goldman prefers Ether to Bitcoin as the valuation risk bets, gold is a value buy according to Goldman Sachs' Jeff Curry and his commodities research group. Ethereum could dethrone Bitcoin as the dominant cryptocurrency, Goldman Sachs said. The bank said in the note that Ether currently looks like the cryptocurrency with the greatest potential for real use, as Ethereum, the platform on which it is the native digital currency, is the most popular development platform for smart contract applications. Cryptocurrencies were mostly higher on Wednesday, as bullish sentiment improves. Bitcoin was trading around $34,000 at the time of publication, but is still down about 1% over the past week. Ether, however, has been outperforming Bitcoin and is up about 3% over the past week. Argentine lawmaker proposes bill to allow companies to pay employees in cryptocurrencies. Congressman José Luis Ramón presented on Monday a bill to allow employees and service exporters to receive their total or partial salary in cryptocurrencies. Large blackout in Central America. An electrical failure of unknown origin caused a regional blackout that simultaneously affected Honduras, Nicaragua, Guatemala, and El Salvador, and that persists in several Central American territories. Technological. Trump sues Facebook, Twitter, and Google for censorship. The former president has filed lawsuits against Facebook, Twitter, and Google, as well as their respective CEOs, before the court for the Southern District of Florida, accusing the companies of unconstitutional censorship after blocking his and other politicians' accounts. Google sued by states alleging Play Store fees violate antitrust law. Google's App Store, called Google Play on Wednesday, became the largest target of big tech antitrust regulators in a federal lawsuit filed by dozens of attorneys general led by the state of Utah. Wikipedia is more one-sided than ever, opines co-founder Larry Sanger. In his view, Wikipedia, like many other deeply biased institutions of a brave new digital world, has become a kind of thought police that has de facto shackled conservative viewpoints with which they disagree. Human resources. Success of the 4-day week in Iceland. The experiment works, at least in Iceland. Tests with the 4-day work week in the small European country were a resounding success, and it is already producing a change in work patterns. In the experiment conducted from 2015 to 2019, workers were paid by the same for working few hours, and productivity was maintained or improved in most workplaces, the researcher said. Other similar experiments are being conducted in other parts of the world, such as Spain and New Zealand. IMF's call on G20 to prevent devastating double shock to poorest countries. IMF Managing Director Kristalina Georgieva, a white hat, on Wednesday asked the world's richest countries to act more quickly on behalf of the poorest, who face a devastating double shock brought on by the health crisis. The poorest countries are facing a devastating double shock of missing out on investments needed to anchor economic growth. Georgieva said, "It is a critical moment that calls for urgent action on the part of the G20 and political actors around the world." A Spanish village offers free work and housing for families who move there. A small Spanish village with less than 200 inhabitants, called Griegos, in the province of Teruel, the second highest village in Spain, is offering free work and rent for 3 months to families from anywhere in the world who want to move there. The only condition is that those who intend to settle there must have children of school age. And that's all for today. Thanks a lot, dear friends.